Today on the Kyler and Cleveland Show, we're going to be going over leverage, margin, free margin, and initial margin. A lot of traders will get that mixed up, so we're going to be there to clarify that for everyone. Let's roll the intro.
Sweet guys, what's up? Welcome back to the Kyler and Cleveland Show. I'm Cleveland.
I'm Kyler.
My main man Kyler. And again, we're going to be going over leverage, some of the intricacies of leverage and margin. A lot of guys don't really understand the difference between leverage and margin, period. But then there's different types of margin, all right? So we're going to be talking about that. And then we have two pretty good opportunities that we're looking at this week when it comes to certain trades. So then we got the trade of the day, and then we're going to dive into the comments on the trailer that we shot last week and answer some of the questions that some of the guys answered away. All right. So if you guys are new to the channel, what's up? Please make sure you guys subscribe. We're going to be pushing out a tremendous amount of content detailing FX and all the intricacies of what's happening from the fundamental standpoint and from a technical standpoint. All right. And if you like the video for your boy, I really appreciate it. All right. So getting things started, Kyler, I'm going to be hitting him with a bunch of questions involving leverage and everything involving leverage. Kyler is like a Nazi when it comes to rationalizing every facet of the market, so he knows everything. Okay, so first things first, Kyler, what is leverage? All right, people don't understand margin a lot. They kind of understand leverage. They know that means a high leverage usually means that they have a tremendous amount of buying power. Now, they get a little bit antsy when you start saying words like buying power, but they just know that the higher the leverage they got, the bigger the trades they can put on and the more money they make. All right. So can you help the traders rationalize what leverage is and how it affects their trading in what capacity?
Of course. So leverage is you're really just borrowing money from your broker to be able to maximize your profits. But at the same time, you can maximize your losses. So it's really a double-edged sword.
Yeah. And so when it comes to a certain leverage amount, right, there's like 50 to 1 leverage, there's 100 to 1 leverage. You have brokers out there that are doing like 1,000 to 1 leverage. What's that all about?
3,000.
Or 3,000 to 1 leverage. What is that?
Okay, so with leverage, if you have a 50 to 1 leverage, for every dollar that you have in your account, you're getting $50 in buying power. So you can really see how it amplifies everything. Gotcha.
So if a broker offers you 200 to 1 leverage, that means they're going to give you $200 for every dollar you have in your account.
Exactly.
So when you're putting on a standard lot, that's 100,000 units of the currency, right? In a currency pair, you have the base and you have the quote, right? And so anytime you're executing leverage, they're rationalizing things in form of the base, right? Not the quote, right? So what's interesting is, say I want to put on a standard lot of the dollar versus the Canadian dollar, right? USD CAD. So if I get 100,000 units, so that means basically I have $100,000 of buying power. So for me to put that trade on, if I wanted a standard, I'd have to have $100,000 in my trading account. But even if I had 2 to 1 leverage, immediately it cuts in half, and I have to have $50,000 in my trading account, and then they're going to margin me the other $50,000. But they technically wouldn't do that because of free margin, right? And all that kind of stuff. But we'll talk about that in a second. But if you get a standard unit of, let's say again, the dollar CAD, and you have 100 to 1 leverage, how much would I have to have in my account if I wanted to put on that USD CAD position, a standard lot, 100,000 units of buying power? How much capital of my capital do I need to have in my account at least to post that trade? 100 to 1 leverage, a standard lot for the USD CAD.
You have to have $1,000.
$1,000, and that's because they need me to have $1,000 for every $100,000 they give me.
Yeah, that's correct.
Because it's 100 to 1, right? Okay, so that's leverage. I mean, does it get more complicated than that? What are the intricacies of leverage? What are some of the things that you think people may miss out on? I mean, because that seems pretty simple. If you guys still got questions, of course, put it in the comments. But what else? I mean, is there anything people are missing out on?
Well, I guess really just remember that it's a double-edged sword. So that if you were to place 100,000 units or 1 standard lot on a position on your $1,000 account and had let's say a 10 pip stop, that's $100, and you were out that much, that's 10% of the $100,000 account.
Right. I get it. So basically 10 pips down is represented as $1 a pip. That's $100. Boom, you just lost 10% of the portfolio.
Exactly. But at the same time, if you were to gain that much, you'd be up.
That's pretty good, right? So that's the thing that people are fighting.
Yes.
Right, okay. But there's another element to this that I do want to touch on that dives into the intricacies of the broker, right? So we see a lot of folks, and you hate this and I hate this. They'll talk about penny trades, I'll put a dime on, right? Because in MT4, you have 0.1, and they'll say, yeah, I had on a dime standard, or I put up 10 cents for the trade. What are they talking about? Or they'll say, I put on penny trades, or they'll say, I put on dollar trades. What are they? They're talking about the actual size of the contract.
Yeah, and the price per pip.
Exactly.
Yeah.
And so a lot of times you'll see people post on their broker that, I'm in a penny trade, I have on 5 pennies, and look at all this money I made. But what they're actually talking about is the size of the contract. So one contract in MetaTrader 4 is represented as 1.00. Okay, so you don't have on $1, that's 100,000 units of the currency.
Yep.
Right? And so when you guys see people, or if you guys are saying that I'm doing penny trades, or I'm doing dime trades, or I have 12 cents on this trade, that doesn't make any sense, right? That means if you have 12 cents on this trade, that means you have a mini lot and 2 micro lots.
Yeah.
You have $10,000 of buying power plus $2,000 more of buying power. Which means you simply just have $12,000 of buying power. Okay, so that's just something I wanted to touch up on, that people oftentimes get confused when it comes to leverage and all these different types of things, right? So that's simple enough. Now, moving over into margin. How does margin come into this game of leverage and the broker loaning you out money? Like, I don't get that. Tell me how that works.
So with margin, it's really just a good faith deposit. So let's say you're going to do that 50-to-1 leverage. You'll have to have 2% on that position. And if you're doing 1-to-20 leverage,
2%. Where's this 2% come from? I'm confused. Why does the broker want me to post 2% of my capital?
Well, it comes from the 50-to-1 leverage. So if you were to do 1 divided by 50, you'll get 2%, and the same goes for the 1-to-20 leverage. So if you were to do 1 divided by 20, you'll get 5%, and that's just really saying that you'll need 2% margin to open that position.
I get it, and that's because the leverage is 50-to-1. So if the leverage is 10-to-1, then I would need 10%.
Yep.
And I would need that 10% because it goes right back to, hey, for every dollar I have, they're going to give me $10.
Correct. So you don't need to put as much up front.
Exactly. So if they're giving me $10, that means I have to give up 10% of the position, because 10 divided by 1 is 10%.
Yep.
I hope that makes sense to you guys. I don't know if we need to clarify that anymore. But when it comes to margin, again, when you're trying to rationalize margin, it always goes right back to the amount of leverage you have. Right, so depending on how much leverage you have, that's going to lower your margin requirement.
Yeah.
Right, because since they're giving you so much, since they're loaning you, letting you borrow so much money for that particular position, and they're making it so that you have to post such a little bit of money, right? That's affecting the amount of money you have to post, which is again the margin requirement, which is that percentage we're talking about.
Yeah, that's correct.
Okay, so I don't know if that is clear to you guys. If it's not, Kyle will hammer it out in the comments section below. So that's margin requirement. Margin requirement is the amount of capital you have in your account. And when you want to put on, again, let's go right back to that USD CAD position. It's a $100,000 USD CAD position. Yeah. All right, let's say we have, make it simple, 100-to-1 leverage. That's the low, I think the standard in Europe. In the US, it's 50-to-1. That's the highest you can go. And so I want to put on that standard lot, which is that USD CAD position. Okay, I have 100-to-1 leverage. Boom, if I have 100-to-1 leverage, the broker's like, okay, look, you want 100,000 of my dollars? Well, look, the deal is for every $100 I give you, you have to give me $1. Okay. And so that means in total, every time I do that, it's going to lead all the way up into $1,000 that I have to have in my account. That's going to be my margin requirement. And that $1,000 is going to give me his $100,000 of buying power. Yeah. Boom. So that's margin requirement. All right. Now, there was a couple of the types of margin that you were talking about. Which one do you want to talk about next?
We can start with initial margin. So initial margin is just the upfront margin that you need to open a position. And when you see with brokers like Oanda, it's usually your position size times their margin requirement. So that could be, like we were talking about the USD CAD and $100,000 or 100,000 units. You would just take that 100,000 units and multiply it by a margin requirement, such as the 2% or the 5%.
Got you. And so that's just going to lead us right back to the amount of money we have to post.
Yep, that's correct. Initially, up front, to open the position.
To even open the position.
Yeah.
Gotcha. Okay, now let's go on free margin, right? That's a whole nother type of margin. What's that deal with?
So free margin is just the leftover margin that you have to open future positions. So your initial margin will be subtracted from that free margin.
Got you. So once we're in that USD CAD position, we locked up $1,000 and now we have $1,000 left over. I can keep trading. But that money that I can keep trading with is represented as my free margin, right? Mm-hmm. Right. And so give me some more details on this free margin. Can I put on another standard?
No, you'd maybe be able to place 80,000 units or 90,000 units, but you couldn't.
Why can't I put on another standard? I have $1,000.
Well, this the margin requirement you need would be 2%.
The minimum margin requirement in the account.
Yes.
Gotcha. Right. Because a lot of brokers, you can't post 100% of all the money you have in your account to every single trade, right? Mm-hmm. So what they ask for is a minimum margin requirement. They have to have some type of capital in the portfolio that is just untradeable, that you can't use. And that's usually around 2%. Yeah. Right? And so that's why usually when you see an account blow up, when traders blow accounts, we look at traders that come to us and they'll talk about how, hey, we need help, with, getting back to break even or whatever it is. And a lot of times when traders say, hey, I blew the hell up, they have like $49 left in their account. Mm-hmm. And why is that? Because that minimum margin requirement of 2% made it so that they took everything, right? Every single nickel out of their account except for that last minimum margin requirement, which was $49, $50 or so. Mm-hmm. Okay, so we've gone over initial margin. All right, that's pretty simple. That's the amount of money it takes to post for that initial position, for any one position, how much capital you have to have, right? Free margin, it's pretty simple. You'll see free margin in your account, how much capital is there for you to keep trading with.
And as you're placing trades, that free margin will slowly go down based on how much or how many positions you're taking, how much margin you're using.
Right. And so then after that, the minimum margin requirement, you guys will see that in your broker. You guys will maybe look into it. That's the amount of money you have to have in your account just so that you're able to continue to trade, because once you go lower than the minimum margin requirement, you can't trade. You're done, and you gotta refund. Okay, so I get that. Okay, so outside of leverage and those intricacies of margin, I mean, I feel like you guys should have a pretty good grasp of what it is, right? I mean, is there anything else you're missing out on? What are some of the things that maybe they need to take a look at in depth, or what are some more important factors of all of that infrastructure that maybe they need to just make sure that they're eyeing every day that they're looking at their trading?
Well, I guess for traders, if you're on the OANDA platform, just be aware of the margin requirements in an initial margin. There's a tab on the side by where your balance is and all your equity that you'll be able to see that. So as you're placing positions, just kind of maybe do the math in your head so you can get used to seeing that. Easier. Yeah, and I guess the biggest thing is if you're using some of these overseas brokers with these ridiculous amounts of leverage, of course that can just destroy you, right? Yeah. We made a video, at all. Don't ever do that. But we made a video on the emotions of trading and how it's highly correlated. It's an amazing study, but we've noticed that the higher the leverage, the higher the emotional instability. Right? So usually traders that have a ridiculous amount of leverage and that have these large positions that they put on have equal or more amounts of emotional turmoil throughout their trading, right? So the thing is that I do like about high leverage is when you have high leverage, the initial margin is low. So let's say you have 1,000 to 1 leverage and you want to put on that standard trade, it's only going to take $100 of margin, okay? And so what that means is if you have $1,000 account, I hate doing it. That means literally you still have $900 in your account up until you probably are going to blow it. But that means you still have $900 in your account to trade with, potentially. But that's not really what I'm looking at, right? I'm assessing it in a way that maybe I have $10,000 in my account. I want to put on a standard lot, which isn't so horrible if I have a $10,000 account. Boom, it only took $100. And I'm still going to be very conservative. I'm still going to risk my 1% like I was supposed to. All it did was give me the ability to have multiple trading opportunities still, and I didn't have to lock up my account so quick. So not as much margin locked up.
Not as much margin locked up. That's why I love high leverage. Not because of the opportunity it gives me from a profit potential, but from the amount of margin it doesn't lock up in my account.
And I think as traders, that's how you can look at stuff professionally and not as someone that's trying to just gamble and place the biggest trade they can.
Exactly. All right. So that sounds good. All right. So moving on, we want to talk about the trade. What's the trade? All right. What's the trade? We're going to do a little bit of animations. What's the trade? Swivel the thing around. Cool. What's the trade? All right. So what are we looking at so far this week? Yesterday, we did do a Monday market breakdown where we were looking at the pound. We thought there was going to be some pound buying opportunities. Pound went crazy, right? So what are you looking at right now for the pound?
Well, I'm still looking at the NZD CAD based on, well, for the Canadian dollar, just based on the production cuts with OPEC, and the New Zealand dollar, people tend to see that as a risk on, risk off currency. And what I mean by that is in times of risk on, where people are willing to take more risk, they'll invest in the New Zealand dollar. And when it's risk off, they tend to pull out of the dollar. You'll see in times of turmoil that the New Zealand dollar will tend to weaken. And right now we're in a time of some volatility with the government shutdown that we're expecting NZD CAD to continue to sell off some.
Okay, so you want this NZD CAD to sell off. That means you're getting some Canadian dollar strength, and you're getting a little bit more NZD weakness.
Yeah, so we're really just playing that divergence.
Exactly. It's an amazing opportunity. So, I mean, that's the best way to trade. So you're tracking CAD based off of oil prices still, I'm assuming. Still still extremely highly correlated. We take a look at oil here real quick. We can see that it did have a quick little pullback sometime this week. Here, I'll pull open the daily here. You guys will see. All right, but right now, we've stabilized. We've stabilized in this little zone that we were looking at earlier last week, where we thought that markets could pull back a bit, but so far they've been able to hold their highs here. It's really just all about if this market can hold its highs. I mean, so, and about how urgent and how aggressive you are. I mean, would we be looking to buy this top here, buy the breakout, or would we be looking to buy the pullback?
I guess for us, we'd be willing to more buy the pullback to get in at a better price.
Right. No, for sure. But technically, Kyler's already been in on this position, and we've actually been able to make a few bucks off of it. We did get a little drawdown here. If we pull over to the NZD CAD, there was a scenario where the CAD did pull back just a bit. But as you guys can see, markets are pulling back down into structure at the moment. So this is something that we're going to be assessing for quite a while. We want to see oil prices continue to trade higher. That's honestly, in my humble opinion, like if we're buying the divergence, we're hoping for NZD to weaken and CAD to strengthen. I'm really betting on this CAD getting stronger because of oil prices.
And right now we're at a time where China is just kind of slowing globally, just around the world. So if we see China start to pick up, their exports start to pick up, their manufacturing PMI start to pick up, you'll see the oil prices start to increase too because of the demand.
Got you. Okay. No, that makes a lot of sense. Sweet. No, that's perfect. And so for the pound, real quick, what are your ideas on this pound? We had a ridiculous amount of volatility yesterday. Pound move swung all over the place, over 200 points to the upside, to the downside. Brexit happened. Brexit didn't happen yesterday. Theresa May got rejected. What's going on? What are your ideas right now?
Now she's facing a vote of confidence, so we're going to have to keep an eye on that.
Right.
But I think overall with the pound, you've seen it just getting beat down so much.
Yeah.
And right now we're at like on the monthly time frame.
Yeah.
We're at the $1.27 levels. So I was just kind of waiting to see that after the month, if we could continue to hold that and close above that level.
Right.
So I think that'll be a big...
There's still a massive opportunity. We're still very much at the lows of 2018. All that tells me is they're pricing in nothing but a horrible situation still. Even if people are a little bit more optimistic, it has not reflected yet in price, and that is technically our opportunity.
Yep.
Right? Okay. So those are our two pairs. We're going to keep an eye on those over the next few weeks or so. We want you guys to keep an eye on them as well. Comment down below some of the things that you guys may are looking at or what you think of that. So those are two pretty good opportunities. What we want to transition over into now is the comment section. And we did find a pretty good comment. I'm going to find it real quick. We had Finance Hardo. He asked, I want to ask, how does one go about interpreting the macro news for the week? I normally look and see what news events are coming up and then future and previous numbers, but how can that be turned into a potential trade idea? Interesting question.
It is very interesting. So I guess whenever we're interpreting news, we're not going off every single indicator or fundamental indicator or news event. We're really understanding what has been priced into the market. So you'll see with the euro that people have priced in bad PMI. So once we can kind of start seeing that
before PMI comes out.
Yeah, before PMI comes out. So we can see that get beaten down so much. We'll eventually start to see if we can get a turnaround in the PMI, so we're really just reacting to everything.
Mm-hmm.
We're not going based off every fundamental news that comes out for each currency. So, like I said, if we're seeing it getting beat down so much, we'll start to see or wait till it gets to be like better readings and then start pricing that in. So we're just reacting to the bad news,
right?
Because eventually it'll start to turn around. It's just like with everything in life.
Yeah, it's like that for sure. But so basically, what you're saying is the data release itself, in terms of the number that comes out, is almost meaningless.
Yeah.
It's about how people react to that data release,
exactly.
Which is really interesting.
Yeah, because there's data releases that come out all the time that may come out good, but people aren't paying attention to that. So it's just kind of pointless to sit and try to trade based off of that. But if you know it's relevant to the market and that's what's been driving it, then we'll start to pay attention to it.
Me and Kyle remember back in 2015 where an NFP would come out and the market would explode.
Like 300 pips.
It would go insane. And it would do that every single month in 2015 all the way up until Donald Trump got elected. And then something started to change to where traders weren't reacting so much or putting so much emphasis on non-farm payroll numbers because they were distracted, right? Because if there's so much going on and there's all these different things happening outside of NFP, traders are going to be putting their money not on NFP, but on the more pertinent information or pertinent releases or just circumstances that are happening today. Exactly. And so now literally you'll see NFP go off and you won't even see any type of real or massive price move, at least compared to back then.
And like you said, it's just more of like what's relevant. So it was probably back in 2015 that we would see 2015 you would see those big moves in NFP, but now people are putting their focus on Trump, like North Korea stuff, the tariffs, China, and back then that wasn't going on.
It wasn't going on.
Now it just shows like what's relevant. I think people are starting to be. They're taking everything more serious, and NFP back then was maybe
that was serious.
Yeah,
but that was the big thing. Like how many jobs are added to the labor market every month? That was the thing that told us that we're doing great. Now the thing that tells us how we're doing is the country about to explode or not, and whatever else is happening and involving Donald Trump and whatnot. So again, you asked the question, how do I interpret fundamental data based off of the numbers? Dude, right now you don't, bro. I mean, just look at what happened yesterday with the pound and its massive sell-off, and then it bought all the way back up. That wasn't even data, right? That was simply just jawboning, right? And so we've talked about jawboning, and if you go back on the channel, I mean, if you go back 20 videos all the way up until here, I mean, you're going to have a very solid rationalization of really how this market actually works. And if people are trading technicals, or if people are trading fundamentals, you can be trading fundamentals and focusing down on fundamentals all you want. But there's even a way to trade fundamentals incorrectly, like massively incorrectly. And that's usually people that are scrutinizing every single move, like, oh, the forecast was this, the actual was that. That doesn't really matter, right? I mean, that's almost irrelevant in many cases. And when it comes to technicals, that's almost always irrelevant when it comes to an actual directional bias. Okay, so that's a pretty deep question. It's a great question. But you remember, you want to assess more about what's happening right now and what people have priced in. If people have priced in negative things, then you're basically hoping that whatever negative thing they've priced in, you're going to hope that sentiment is going to start to turn around and that more positive things are going to start coming into light, right? I mean, even when you look at the Japanese yen has exploded over 4% in the past few months, not because of any economic data, merely just based off of fear and greed, right? Market participants being more risk averse. That's why that asset moved. And so if you're assessing markets in that capacity, then you're going to do well. But if you're looking at the yen from a fundamental standpoint only and only assessing, hey, the yen CPI or inflation data just came out negative, dude, you're going to get destroyed, bro, because the market's not moving off of that information right now.
Chasing your tail.
It's
reports back and forth.
100%. So we're going to dive into a few more comments on a next Cleveland and Kyler show, because this one went a little bit longer. Maybe we'll get in about 3 or 4 comments. So again, guys, comment down below some questions. We'll present them here on the channel. We'll answer those away, and you guys will be very, very happy. And hopefully we'll answer them at our fullest capacity, right? So next week, we're going to be going a little bit deeper, not into leverage and margin, but some more things about the basics. I want to actually talk a little bit more about currency risk, right? Yeah, and how counterparty currency risk can affect your entire trading business. It's a pretty big deal. It's beginner level, but a lot of people miss over it. Right? All right. So cool, guys. Look, if you like the video for your homies here. All right, Kyle and Cleveland. And if you guys are not subscribed, make sure you guys subscribe. If you guys need more help understanding the intricacies of fundamentals, anything in that capacity, we built out like a 20-hour video training. You guys can get access to that in the link in the description. All right. So outside of that, guys, we will see you very soon. We have a few more pieces coming out later on this week. We'll see you around. All right. Make sure you guys subscribe. We'll talk to you soon. Peace.